My name is Jay Bridgeball. I'm a real estate broker since 1988. I've seen the good days, the bad days, and the not so bad days. My passion is to educate consumer about all aspects in real estate. Actually, I sold over $1.75 billion in real estate. Now, that's a lot of experience. I went through many failures, many successes, and I've seen many stories that you will be amazed. Not everything looks so glamorous as it is sometimes. On Let's Talk Real Estate, we will dig deep down and I will take you step by step through every process, from buying your first home to buying a multi-million-dollar investment property. We will have various people on this show. Lawyers, investors, we'll have mortgage brokers, appraisals, and everyone else to assist us to take you to that point. My aim is to break it down in such easy terms that you will be able to follow. So please join me every Thursday between 1 and 2, and let's talk real estate. Hello and welcome to this session of Let's Talk Real Estate. I am Jay Bridgeball, and today we have Sandra Phekoo. Sandra, welcome aboard.
Great, nice to be here. Thanks for having me.
It's a real pleasure. And Sandra is in insurance for how long?
I've been in insurance for 20 years.
For 20 years. Very knowledgeable, and you're working currently for?
I work for the Corporate General Insurance, Gary Lasco Financial Services.
Okay, yeah. Great, Sandra. Now, what we'll be talking today for 4 sessions is everything you want to know about insurance, especially when it comes to real estate. Sandra, I bought a home, and first thing the bank recommends is that I have insurance, fire insurance. Could you talk about that a little bit?
Sure, I can. Fire insurance, the term fire insurance actually is a very old term. Because it started with first fire and then all these other coverages were added on. So now it's more of a comprehensive type home insurance, but it's to protect the bank's asset as well as protect your asset, because you're putting a lot of money into this valuable home.
Wow.
And you want to protect it if a fire happens, if there's lightning, if there's a flood. If somebody drives their car into your house, you want to protect your asset as well as the bank wants to protect their money, right? For lending you.
Of course. So that's why it's something that is mandatory once you have a mortgage.
That's right. Because the bank, for insurance companies, we have an obligation to the banks. That's why we put their names on our policies, and the obligation is to notify them if something goes wrong, right?
So if I don't pay my insurance policy, what happens?
We send a letter right away to your lender, whoever your lender is.
Right, and then what the lender will say, they can see that I defaulted on my insurance.
That's right.
As such, they can put my home under power of sale.
They can do whatever they want to do. And insurance companies have so much obligation. Even if, say, you committed a crime by trying to burn your house down, we have no obligation to you to cover and rebuild that house, but we still have an obligation to the lender.
Wow.
Yes.
Wow. So that's very important.
Yes.
Now, if I'm looking for, let's say, an insurance for covering my property.
Yes.
What are the products out there, and what best to look out for?
So there's lots of different kinds of products, and each insurance company, they have different names. So comprehensive is the best type of policy, and always try and get the comprehensive policies. But you have different levels. We have a basic and we have a middle of the way policies.
What's the difference between comprehensive, basic, and middle?
So when we talk about comprehensive, think of a blanket, covering everybody's covered with a blanket. And we say you're covered for all this except this, because it's easier to list what you're not covered for, because it's very, very limited.
Yes.
But when you say basic, we're going to say A, B, C, D, you're only covered for this, as opposed to the blanket, right?
Okay.
So it's always best to have.
Cost differential.
Depending on the insurance company, it may be not much, or it could be $200-300 in costs, right?
A typical insurance policy for a home, what roughly the cost, middle range cost?
Oh, Jay, it's a matrix. I could never give you one number because with all insurance companies, there's so many different factors. Where you live, postal code, there's something called rating by perils, depending on what area you are. If there's more fire, more crime. They look at flood coverage, what you're prone to. They even look at your credit score.
Oh, okay.
So it's a matrix, a wide matrix, so you couldn't hone in on one thing. But have a good credit score and you'd probably have one of the best rates, but also the location is very important. So you could have somebody with the same size of house, same everything, in the same area next door, and they'd be paying two different rates, and it's because of all those different factors, right?
Okay, I have a home and I have some tenants living in the basement. What kind of insurance would I require? Should I even tell the bank that here, you know what, I got a basement apartment, I'm renting it, or just say here, I'll hide that under the cover, take the cheapest insurance?
No,
many people do that, right? That's why I brought it up.
They do. It's called insurance leakage, right? I mean, and the most important thing is never lie to your insurance company, because in the event of a loss, you don't want it being denied, especially with your asset, an important asset. To have a tenant in a basement and for the insurance company to add that additional cost, it's not that expensive. It might just be an additional liability, which may be $60 a year. So it'll be your primary home with your tenant in the basement, and we have to make sure we capture that the basement is finished. So there's no need to lie, and people are afraid of these things. It's not going to go up exorbitantly. It's your primary home, right?
Right. Safety come first, and the bottom line, you are paying insurance, and most insurance company, they tend to do their underwriting.
Yes.
Not at the beginning. They do the underwriting when there is a claim. Am I correct?
Well, when there is a claim, the whole process is, Jay, during the whole course of having a policy, if something changes, it's called material change in risk, please call the insurance company and ask for their advice. And if you have a good insurance advisor, they will advise you. They're not going to say, we're going to do it now. They will advise you what's the best way and what's the best route to turn to. So what we do is, that phrase that's in all your policy wording says material change. Whenever there's something coming up, please call. We will amend it. Don't wait for the claim to occur.
Okay.
But we're not saying that the claim will be denied. We're just saying we don't want the hassle. In the claim situation, do you want that hassle?
So what are some material changes? Okay, I got 5 people living in my home, and then tomorrow I have 8 people. Should I inform the insurance company?
It depends. It depends on what those people are doing. If they're students, if they're tenants, or if they're just family members. Family members are covered under the policy wordings.
Okay.
A family member is, as long as your parents, your nephew, niece, they're related to you, there's no need to tell us about that.
Okay.
But if you're transacting a business, like having a tenant or having roomers, 2, 3, 4 roomers renting a room, that's a material change, because again, they're not related to you. They could destroy your house. They have additional liabilities that they could bring to your property, right?
So how does the insurance company look at our typical home, let's say around the college area, where people chop it up and put 10 rooms and are renting the room?
Oh my God.
What are the implications there?
Actually, as long as you tell the truth, there's no implications. Don't lie to us. We will just rate it accordingly. And if you have a house that you have 8 kids, it is not that expensive. It will be rated differently than your house or my house with our families living there, but it's not going to be 8,000. It's going to be maybe 2,000-3,000 depending on the area. But then again, you're claiming that on your taxes, so it's supposed to offset some of that. Insurance cost is going to be offset what you claim on your taxes, rental income from all those rumors. But don't lie to us. And I think people are afraid of not telling us the truth because they think they're going to get canceled. They think that the rates are going to go skyrocket. Really, it's not that.
So it's good to be upfront.
Be upfront.
Well, they said, you know what? It's always good to tell your lawyer, your realtor, and your insurance agent the truth, because then they will be able to tailor what you want based on what you tell them. Right? Those are very, very important points.
Yes, I agree.
Now, I have a rental property, and I live in my primary property.
Yes.
The insurance on my rental property, is it vast different?
It depends where your rental property is. Depends on how big it is. Depends on how many units there are.
Right.
It's your primary home will always be the cheapest, even though it's a bigger home or more valuable. It will always be the cheapest because of care and control. You're there, but a rental property you're not. You may see a difference, maybe 400, 600, depending on the insurance companies. Is all difference, right? But again, if you've got 2 units, then that means added liability. So there's an additional cost.
There'll be a cost for that as well.
Yeah, because if you think about 2 units or 3 units, more people visiting, chance of people hurting themselves, suing you as a landlord.
Right.
So those are the things to look at. Yeah.
Those are important
Those
things
are very
to look
important.
at.
Yes. And then the other thing is to always make sure when you have a rental property is to check for, you have the right to go in and examine and check. No marijuana grow-ups, no chemicals being made, things like that do occur.
Those are important.
Yes.
I know
As a realtor,
with my rental properties, every so often cooperators will send someone to inspect these properties.
Yes. Oh,
right,
every 3 years we should.
Every 3 years
yes.
they usually send someone to inspect.
Yeah.
And recommendations for rental property, they recommend when they came through, hey, make sure you got a fire, working smoke alarm, working, fire extinguisher, and all these things. Are these requirements according to the Insurance Act?
For the insurance, those things regarding fire alarms, smoke detectors, they're municipal and provincially they're enacted where you have to have them working.
Right.
So you should, as a landlord, have those working anyways.
Yes.
If they weren't working as an insurance company, we're not going to deny your claim because you're renting the property, and sometimes tenants do crazy things, take out the batteries.
That's true.
And take the breaker off for the alarm, things like that. But as long as the province knows or the government's knows
that's a very good point. Again, if you're renting a property, you want your tenant to be safe.
Yes.
You also want to satisfy all the codes.
That's right.
And make sure it's okay. Because again, two things: you're protecting life, and you're protecting your investment.
Yeah, and you're protecting your liability because the chance of lawsuits is great.
I have known the two families who got sued by tenants renting their basement.
Yes.
And they did not inform the insurance company, and the insurance company denied their claim.
Really?
Yeah, because they'd never tell the insurance company they are renting their basement.
And I thought you meant like after the claim.
No,
you tell them, and that's one of the reasons why you tell your insurance companies, because if you get sued, that's what the insurance company is there for, your liability, to protect you, to defend you, to pay that $1 million or $2 million. So that's why don't lie and say you don't have tenants.
Hold that thought. When we get back, we'll talk more about insurance as it relates to condominiums. Take care. See you soon.
Are you retiring smart? Make your home's equity work for you. With your home's equity and our 30 years of experience, the Retire Smart Properties team can help you achieve the quality of life you've always wanted. Our services are 360 degrees. We'll give you advice, take care of staging and selling, and help you find the perfect home and community to transition to. It's time to enjoy the retirement lifestyle you deserve. Visit our website today to learn how you can use your home to retire comfortably. The Retire Smart Properties team, powered by RE/MAX West.
Hello, welcome again. Just to let you know, we are discussing everything you want to know about insurance today, especially when it comes to real estate. I have with me Sandra Phekoo. She has been in the industry for 20 years.
Yes.
And is with cooperators. Sandra, just before the break, we are talking about insurance as it relates to an investment property, freehold property.
Yeah.
Now, I own a condo that I am living in. The condo, part of my maintenance fee include insurance, and the bank do not require insurance. Do I still need additional insurance?
Oh yes, you most definitely do need it, because again, it is a valuable asset. You put money into there. Remember, the condo corp covers the outside and the common areas. What about your inside? What about your liability? What about if the condo corp reassessed all the units? Where are you getting that money if you had to pay 10,000?
So you mean to tell me that a condo insurance will cover reassessment as well?
It will definitely. Even say, for example, I always tell people if there was a loss and somebody sued the condo corp because maybe the common areas wasn't looked after, and the condo corp said now everybody's going to have to give us 10,000. That's where your insurance comes in as well, right? But
Wow.
assessment is very important. That is so important. Plus liability again, liability. And you own everything in that unit. You own the floors, you own the walls, cabinetry. There's a fire. What's happening there? Like,
Wouldn't the condo insurance cover that?
it will not, because it's not their responsibility. Theirs is outside those walls, not inside. Inside is yours.
Okay,
Yeah.
so everything internally have to take care
Yes.
of.
Yes.
I've seen many situations where the bathtub overflow.
Yes.
And the next thing you know, they're not home, and
Yes.
or the toilet
Yes.
something happened, and it start overflowing, and then it goes trickle 3 floors down.
Yes.
And the insurance condominium corporation say, hey, that's not our problem.
That's right. That's absolutely right. And what about now? I have to rip out my hardwood floor. Who's going
Right.
to pay that? Right?
Right.
Who's going to pay those guys from the lower levels? Right? What
Right.
if they sue me? Those are things to consider.
There are a lot of things to consider.
Yes.
So although you have a condominium and you have the protection under the Condominium Act, you still need insurance to protect yourself. Else for your content insurance,
Yes.
and you need liability
Liability and your
Mm-hmm.
contents. Again, if you think again of fire,
right?
where's your clothing going to come from? Where are you going to stay while you're fixing your apartment? That's where that money comes from, the insurance company.
Okay.
They bill all that in.
Are condo insurance very expensive?
Oh, no, not at all, because we're not insuring the outside. And we
Okay.
only go based on your inside and what you feel your contents are worth. And if you put in your cabinetry, different things, it is so inexpensive.
It is very
Yes.
That's great to know. I have a condo as a rental. Is it different?
It's different in the sense that you don't have contents, but the same applies. Your loss assessment is still there, which is important. Your liability, if a tenant sues you, it's still important. And plus, you own the fridge, you own the dishwasher. What if there is a damage? How do you get
that?
Yeah.
But I always ask my tenants to get tenant insurance.
Tenant only covers their contents, covers nothing that belongs to you as a landlord.
Oh, wow.
Yeah.
Okay, so the tenant insurance cover their content, but
Yeah.
nothing for me as a landlord.
No.
So even if I'm renting the property, it's good to have at least third-party liability.
Which is very important. Again, and
Yes.
I can't stress that enough. Liability, even as a
Yes.
tenant, liability. We live in a litigious society. Everybody's suing everybody. If somebody comes over and hurts himself, they'll sue the person who's renting. They'll sue the landlord as well.
Yeah, you're getting me scratching my
Yes,
head.
it's scary. Just and it's not expensive.
Yeah, because you hear about all these lawyers. They say, hey, you know what? You don't need any money. Just come to us.
Yeah.
We will file a case and we will fight them, right?
Yes.
And that's where the insurance comes in to protect you.
Yeah,
You
yes.
don't know what you're doing.
And you've got to also remember the insurance policy covers your actions anywhere in the world. So
Okay.
anything that if I always tell people you're shopping downtown Toronto, you trip somebody, they fell down, broke their jaw, they could sue you.
Yep.
And your insurance, you've got home insurance, right?
The
Covers
home
your actions.
insurance even
Yeah.
covers you when you're not at home.
Oh, yeah, it does not only, it's not restricted
Oh,
to where
wow.
you live. It's your actions anywhere.
Oh, wow. Good to know that. That's a
Yes.
very important point. And now, another aspect. I have a mortgage, and the bank wants to sell me their insurance, mortgage insurance. Now, in one way, I look at it, hey, you know what? If I don't come home, at least my mortgage is paid off.
Mm-hmm.
What are your thoughts on banks insured mortgage?
So this is just my opinion. I don't recommend mortgage insurance at all.
Oh,
And there's
okay.
I stay away from it. I don't recommend it. And again, people think because they're getting a mortgage that they have to get it. The banks by law have to offer it, but you never have to take it. But they may make it seem as though you have to take it.
Of course, it's called upsell.
Yeah. No, but and there's so many reasons as to why
Yes.
not get the mortgage insurance.
What are some of the reasons?
So some of the reasons, definitely you don't own it. It belongs to the bank. It only protects their interests. It's not credit proof. When you die, yes, your mortgage is paid off, but who's going to pay continued expenses for your family? The light bill. Who's going to pay the funeral? Who's going to pay for kids' university? None of that is being paid.
what I did different is that instead of taking a mortgage insurance is considered a decreasing term insurance.
Yes.
They're only paying the remaining
That's
balance because every month your principal amount reduced, right?
That's right.
What I did instead, I took a level term insurance
Yes.
for the same 25 years, and I
Yes.
find the cost is about the same.
Oh, term insurance is very inexpensive because
Uh-huh.
there's no cash values or dividends, and we
Right.
look at the term that you want. So we have 10, 20, 25, 30-year term.
Right.
So depending on what you have, you take it and then get rid of it at the end. It is cheaper. It is yours to do what you want to do with it. And if during the course of time you find your mortgage is going down, you could reduce that down as well. You have so much flexibility with a term.
Plus,
Yeah.
also, even for some reason, if we did not come home, their family member will not only have their house paid off, they will get the full amount in their hand.
That's right.
And they can choose whether they want to pay the home
Yes.
off or send the kids to university.
Oh, I agree. That complete autonomy. Do you not want that with your money, as opposed to giving a bank who has control? That's what you want to do. You want your
Okay.
beneficiary to do what they want to do, what they feel right doing, right? Which is important.
Which is important.
Yeah.
I've known situation where you're about to sign up all the mortgage documents. There is a clause there say, hey, do you want insurance?
Yes.
Yes or no. I've had a situation where someone said yes.
Mm-hmm.
The family member, the person that signed the insurance policy died before the deal closes.
Oh no.
And the deal did close though
Yes.
because the deal was bought in the husband and wife name.
Yes.
And the mortgage insurance pay for the entire mortgage.
Yeah.
The deal, by the time the deal was closed, it was all paid for.
They were one of the lucky ones, but if you had the life insurance, we would have done the same thing. We would have given
Right.
your wife that check. Plus, she would take that check and pay for your funeral.
Now, is there anything wrong with saying, hey, you know what, I'm just in the process. I bought a home today, closing, let's say 4 months for in advance. I go to the bank to sign up all my paper. Is it okay at this point? I haven't got insurance, let's say, from someone as you as yet. But is it okay for me to say yes and then I could cancel maybe about 2-3 months into my policy? Is there any, am I locked in?
You're not locked in with mortgage insurance at the bank at all. You're not locked in at
Okay.
all. Remember, it's not portable. It's not locked in. You could cancel it whenever you want. And I have a lot of customers who do that. They do sign up with the mortgage insurance because they haven't spoken to a life insurance representative.
Okay,
And then
and
they
then
come.
later.
Yeah, they get their quotes. They get it all done in place, and then they cancel.
Wow, wow. So these are very important aspects when you are buying a home when it comes to insurance.
Yes.
You got to make sure that these things are being done. Now, Sandra, another aspect. Let's talk a little bit about life insurance. There seems to be so much confusion about life insurance.
Yes.
What's really going on? What are some of the products out there? I've heard that, sometimes they give you cash value and insurance, but then you get only one.
Yeah.
Could you shed some light into these things?
Life insurance. The reason why there's so many different thoughts is because we want the public, as a consumer, you have to have options
Right.
for your needs. So we have permanent needs. So,
Uh-huh.
for example, when you die, you want to pass money on to your children and all that. Then we have temporary needs, like a mortgage is a temporary need.
Right.
When kids are young, you want to make sure they're covered, so that's a temporary need. So what you need to do is really evaluate where you want to be. Do I want to leave a legacy, or do I just want to cover my temporary needs? So if it's a temporary need coverage, I'd get term insurance for 30 years. By then, my mortgage is done, my kids are out of the house, my obligations are reduced, and I get rid of it at the end of it.
Right.
So that's why most people would buy a term, because you can buy lots of it for very little bit of money.
Okay.
And you can buy $500,000-600,000 for maybe $300 a year, like very inexpensive to purchase it.
Okay, so that comes in handy for young family members starting out where, we got a big mortgage, we have property tax, we got, we are just starting life.
Yes.
But we want that protection because that's the most vulnerable time in our life. If
That's
one
right.
of us doesn't come home, the kids still have to go to
Yeah,
school.
yeah.
Mortgage has to be paid.
That's right.
So many people tend to go for the term at the beginning. However, later in life, as life advances, these things are gone.
Yeah.
You're thinking, hey, you know what? Maybe I need to leave a legacy for my family. But by then, the other insurance is you try to get the whole of life now, and it becomes very expensive.
That's right. That's right, because whole whole life. That's what it means. It doesn't end at age 85 like some term policies
Right.
do. There's no renewal term like term policies. It is constant rate for your entire life. It's always best to purchase it when you're younger, but as we know, young families.
The catch
That's right. But with term insurance, it's great because it can be converted at any point in time.
Oh,
So
so
to
you
a
can
permanent plan.
you can take a term, and then later when you feel you're okay, then
Yes.
you can convert it.
Yeah, so it would be based on the age that you are at conversion. So that's why we try to maybe get our young families in like 3 years after and talk to them and see where they're at and figure out maybe let's just convert a little bit for now, maybe 25,000, 50,000, and then a little bit more later on, right? So it's that
Okay.
flexibility. It's yours, right? Yeah.
Should I use insurance as a vehicle to save?
You definitely can use it. Universal Life is a great product. It's really
Just hold that thought. What we will do after this break, we will get back and we will talk about universal life and other means. Thank you.
When you know your purpose, you know your function, because the function dictates the purpose. It's not talking about what color this thing is. Life is about a function. And only when you function do you see purpose. This is where we live, just here. What we think. We miss the human when we just focus on the black of the hand or the white of the palm. But my goal in life is to get people to understand your function. Let them feel their love. Let them know you. Let them know your struggle. So when we talk about community, it's talking about coming together, unity.
Are you retiring smart? Make your home's equity work for you. With your home's equity in our 30 years of experience, the Retire Smart Properties team can help you achieve the quality of life you've always wanted. Our services are 360 degrees. We'll give you advice, take care of staging and selling, and help you find the perfect home and community to transition to. It's time to enjoy the retirement lifestyle you deserve. Visit our website today to learn how you can use your home to retire comfortably. The Retire Smart Properties team, powered by RE/MAX West.
Hello, welcome to Talk Real Estate, and here I have Sandra Phekoo with me. We were discussing insurance and the whole, everything you want to know about insurance today we will be discussing. And if you want to ask us a question, you can call at 647-931-4701. Now, Sandra, we were talking about term insurance versus whole of life insurance, and we are looking at the various products that's there.
Yeah.
You're just telling me about one that universal life insurance. What's that all about?
So Universal Life is a life insurance policy, but it has an investment component to it.
Okay.
So when you make your deposits, your monthly deposits into that life plan, part of it goes for the cost of insurance, and a little bit of it goes to investments.
Okay.
And the whole idea behind that is when the markets are great and interest rates are great, your money's going to grow. And at some point in time, you may not even have to pay that insurance policy because the investment part has grown. But the most important thing with Universal Life is if you're going to get a policy, it's meant to be overfunded. It's meant to be put in more than just the basic cost of insurance. And that's where, when you overfund it, is where that money is going to go for investments.
Okay, so that money is going for investment, and I develop a decent cash value. Could I take that money anytime I want the cash value?
You definitely can. So it depends on the kind of policy. Again, there's so many,
Yes.
there's enhanced policies, there's level policies where upon death you get the investment plus the life insurance, and then
Right.
there's the ones that is just the face value. But if you have a cash build-up, you could take a loan against it, you can take the cash out, and if it's an enhanced policy, when you take the cash out, it does not deplete your face value of the policy
But
at
if
all.
it's not enhanced,
It will deplete, your face value will be reduced.
So if I save towards my cash, and I say, let's say I put away money there, I got 100,000 in cash.
Yeah.
and my insurance policy is 200,000. If I take the cash, this will drop to 100,000.
Yeah, because it's not the enhanced. Because the way universal life, it's a little bit complex. The way it works is that at the beginning, your cost of insurance is very little, but as you get older, the cost of insurance goes up. So that investment is supposed
It's
to
being utilized that way.
yeah, to grow that way.
So it's like you're showing me two cards, but say here you only get one.
Not in all cases, but then you could take a loan against it. It's sitting there. You could take a loan. You get some policies like whole life will pay dividends, so you have that opportunity of taking those dividends out.
Yeah, but then it will deplete.
Not dividends.
Not
dividends.
dividends. It
No.
won't deplete my face value.
No, not dividends.
Okay.
Yeah, and that's on a whole life policy.
Okay.
But you always have that cash value, and I think a lot of people, why they like universal life, and especially people with wealth, it helps them shelter their money to offset taxes that they know that will have to be paid when they pass away, when they die, because they're going to have to pay taxes on the cottage or taxes on their stocks and bonds. So they hide a lot of that money under the universal life because it is a life policy and the government's not going to tax that. As yet. But there's a threshold, and all insurance companies know what the threshold limits are. So we will never let your policy go into that taxation status.
What is the threshold?
It depends on the limits and the amounts, right? So I couldn't give you a specific figure. It depends on how much amounts that you're putting, how much you've overfunded the policy, right?
Okay, so you can really put away more money towards the cash value.
Yeah. Well, you put in away, actually, you're right, for growth, right?
Yes.
So it helps in long term offset some of those taxes that will be paid.
You will recommend that I take the enhanced policy, therefore that I got both.
Yes, if it's available from your company, the enhanced policies.
Okay, so make sure you go for the enhanced policy, or you get one, right?
And that's why I say if you're going to get a universal life, you have to understand that it's a two-part. It's the investment and the life insurance, and a lot of people don't understand that. So that's why I said then maybe it might be better for you to just take a whole life policy, which you don't have that investment component or is meant to be overfunded. Because if you're not overfunding, or if you're not putting in enough into your universal life policy, there may be a time when it will be ended. Like now, we know our rates are market is very low right now. So you don't have that growth, and it's not enough money in there to pay your policies, right?
Wow, so can you figure here it's freedom 55, but suddenly it's freedom 95.
No way, yes, especially where they say 1 in 5 people will live to be 100.
Right,
yes.
Yeah, but it's changing,
yes.
So you need that. And many people, I find that there are many clients that I go to, they are at that age in their life, and they can hardly make it because their income is just small.
That's right.
And if they have something like that, they can start to take advantage of
That's
that.
Right.
They can
That's
start to
right.
utilize some of that money as well.
Yeah, I've got older people now, and they're like 82, 83, and I'm thinking, why are you paying anymore? Just take the cash and go, take it out.
Yeah.
And there might be taxes depending. So that's one thing. Always be aware of the taxes involved. Yeah.
Yeah, because I mean, I look at it this way, right? I'm paying for the whole of my life. I'm 90, I still have to pay, and I'm getting just, let's say, $2,500 from the government. Yeah. Can barely buy food.
That's right.
So I'm forced in a position that I have to close my insurance.
But you know what? If you've had one of those permanent plans,
right,
you can just say, I don't want to pay it anymore, and whatever the face value is at that time, it's called a reduced paid up value. You'd have a policy still in place.
Oh, so that's good for audience to know.
That's right. You don't have to cash it out. Just say, I don't want to pay anymore, and then you have that face value. But there will never be a time when you're paying more than the face value of your policy, right?
Got you. That's a very important point. Now, many of us, we feel that, we are healthy, we are strong now, and, life will be good at 95 and we live our full life. Yet in today's society, we see so many cases that, people, they got ill very early in their life. Yes. And what would be your recommendation?
I have a great passion for life insurance. I love it because I see the need in our society for it. We don't live back at home in our countries where we have the neighbor to look after families if you die. But what if you got cancer? And what if you got a stroke? And there are insurance policies for that. They're called live-in benefits. You don't have to die. You just have to survive. And we would give you a check. So the stats in Canada say 1 in 2 will get cancer. And I'm sure everybody knows somebody who's had cancer. And 1 in 5, I think, will survive a heart attack. So you have to think of those things. And the great thing about critical illness is if you never use it, you get all your money back. Think of a great savings. So it's fantastic.
What you say, hold that thought. What you say, I get all of my money back.
If you never claim from it.
So I never claim from it. And
Yeah.
okay, at what age I get all my money back?
Age 75, but
Uh-huh.
you can cancel the policy depending on the insurance company again.
Right.
Like with our company, anytime after 15 years, if you cancel your critical illness policy, as long as it is the best policy, if you cancel it at that time, you get all the money that you've put into it.
Up to that time.
Yeah, so we call it, it's not like a term policy. There's different levels of critical illness you could buy.
Right.
But if you buy the best one, which what we call return of premiums or premium payback at surrender, to age 75, so it's a level premium until age 75. If you buy that kind, that's the one you're going to get all your money back anytime after 15 years.
Wow. And how expensive is that?
I recommend getting this at a younger age.
Yeah.
I bought
okay.
it for my kids. So just think, you just had a baby that's born.
Uh-huh.
You buy it for your child. You buy a $50,000 policy, for example.
Uh-huh.
And when they hit 21, they've gone to university and it's finished, and they've still got this policy in place. Why not cash it out and say, here, pay all your university fees, right?
Wow.
Yeah.
That's a smart idea.
Because,
So you can.
yeah.
So really, you're putting away aside where you're getting that protection at the same
Yeah.
time.
Yeah.
And then around 21 or 22, say, hey, you know what? It's time to cash it in and take
Yeah.
money to go to university.
That's right. I know, and a lot of us don't like to think of things happening to our children.
right.
We don't like to think, but we have
Right.
to be realistic, and we have to think about kids do get childhood illnesses. They do get, it's so unfortunate, but it does happen. And little kids do die as well. So those are some of the things we have, we have to really be realistic about, right?
Yeah,
Yeah.
I mean, we know that because you come to many of our events
Yes.
with the Caribbean Children
Yes.
Foundation. We
Yes.
see what's happening.
That's right.
It's there.
Just think if those kids had that critical
Yeah.
illness, they wouldn't have to come to us. They would have that money to go
Yeah.
and pay for their surgery.
Yeah, you're so right because now, so really and truly, having that from a childhood, it's very, very important. It's probably cheap.
Yeah.
Right? The money you're putting away in there is literally a savings
Yeah.
that now you can close that policy when the kid, let's say, is 25,
Yeah.
30.
Any age.
They can
Yeah.
do that and then collect all that money.
Yeah. And the thing is, yes, there's no interest to it, but think of the peace of mind.
Yeah.
If the child had leukemia, then you would have had something to help you along. You could have stayed home, because a lot of parents cannot stay home. They have to work, right? But what do you do?
Of course.
So,
So critical illness is very important.
very important, yeah.
With all these various insurance that I need, I begin to realize that, what, if I have to worry about getting critical illness,
Yes.
mortgage insurance,
Yeah.
life insurance, so many, where would it stop? How do I manage that?
It doesn't stop. Just the thing is to always sit down with your significant other. If you have a spouse, you really need to see what's important. Because the thing is, if you die, like I said, if you hit a pole tonight with your car and you die, your wife is left on her own. Now that child might become motherless because now your wife has to go out and work.
Right.
Now, do we want that? Critical illness, it's something you don't have to buy a $50,000 or $100,000 policy. You could buy a $25,000 policy because in Canada and Ontario, we know most of the drugs are covered. So even $25,000 will pay for those initial drugs.
Okay.
There's disability, there's all those things, and some of those are write-off depending if you are self-employed. So if you bought a disability insurance policy, you can write up probably some of those expenses. Critical illness, if you're self-employed, could be written off as some of those expenses.
Wow.
Yeah.
That's very, very important, Sandra. Now, one other question. It might be, seeing we are a topic, we are talking about housing
Yes.
and insurance as it relates to life. They're all intertwined.
Yes.
Car insurance. If I buy all my insurance through one company, do I get a discount?
Yes, you do.
I do get a
You
discount.
do, of course you do.
Hold that thought. When we get back, we will talk a little bit about car insurance and how it works. We'll also address a very important aspect, a little bit about estate planning. Many of us do have real estate assets, and then, we do not plan when we exit the world. So hold your thoughts. Be back soon.
Think you have what it takes to bring value to the community? The TCN TV network is expanding and now accepting TV show proposals. Here's an opportunity to build celebrity status and become part of an elite group of community advocates that are focused on building, strengthening, and empowering our community in a positive way. Are you interested in embarking on a new adventure? TCN TV is searching for people interested in opportunities to change the conversation and pave an unforgettable legacy. If you feel you have something of value to offer, send a written show proposal to shows@mytcntv.com.
Hello and welcome back to our last segment on insurance. Today we have discussed everything so far about insurance. What kind of insurance we should have for our property, for condominiums, for freehold property, investments. We haven't touched on a few things though. I have all the insurance for that, but now I have to do some estate planning.
Yes.
Right? Many people ignore that. They leave that for last, or they never have done that. I've seen situations at the end of life's journey.
Yes.
They are, let's put it, property rich, but cash poor.
That's right.
And suddenly there are things they have to pay, like probate fees and
Yes.
everything.
Yes.
What are your advice to our people?
So our advice is definitely get life insurance in place, because life insurance is a great asset, a great tool to help with some of those fees. Because we know when you pass away, anything that's not your primary home will be taxed. We know your stocks and bonds will be taxed, your RSPs will be taxed. So think of your beneficiaries now having all these great assets, but oh my God, look at the appreciation and now I've got to pay taxes. They might end up having to sell those assets. So that's why the life insurance is so important, because life insurance is sheltered from the government. It's tax-free. So you have this tax-free life insurance that you would have bought, hopefully when you were younger at a less cost, sheltered from taxes, to replace now that what these beneficiaries have to pay. So it is a great tool to use. Also, it's a great tool for succession planning. So you've got, say, if you're a farmer and one child wants the farm and the other one doesn't, how do you equalize your money there? You take your life insurance and you give it to the one kid who doesn't want a farm, and then the other kid gets the farm, that he gets an asset. So those are different things as well, right?
Okay, that's very, very important. And especially when coming on to life, everyone should have a proper will.
Yes, a proper will and power of attorneys. Please, if anybody, go see a lawyer. You don't have a lawyer, just grab the documents you can get at. So many offices have it.
Right.
Please do a will. Please do a power of attorney. And power of attorney are not only for elderly parents, they're for young kids. So if you think of it, any child over 18, they're a legal adult. So you think, I'm still paying for my university kids, and something happens, you don't have access to the medical records, you have access to the bank account, because they are legal adults. So have power of attorney for your kids who are over 18, who are in university, or you still have obligations.
That's a
to them.
power of care.
Power of attorney, and that would be for your health and your financial. So
okay, for both.
For both, right? Which is very important, especially too for elderlies, because if your parent is at the hospital, who is responsible? Say, I know it's hard to say, but who's going to pull the plug? Who's going to do that? How do I fulfill my parents' wishes? Right? You don't want a doctor making those decisions, right? That's why those power of attorneys are important.
Are important for you. So it's important not only to have power of attorney for your older parents.
Yes.
You should have power of attorney for yourself, for your kids, and also your kids and everyone else.
Yes, please. And I think most of us know somebody who's not had any of those, and see the fighting that goes on amongst families, even though they're close families. When people die, crazy things happen. You know, people fight each other for money. And you don't want that. You don't want that at all, right?
So that's why the will is very important.
Very, extremely important.
And then with the will, you want to also make sure you have the proper administrators and everything in there.
Yes.
I've had a situation with one of my client. She passed away about 5 years ago. God bless her soul. She got 5 kids and she loved them all dearly. And she put all 5 right, as executor. You know, it was a nightmare
Yes.
to sort her estate out
That's
because
right.
everybody started to pull in different directions.
Yes. And can you imagine five kids? But that's why when you do your will,
Right.
like you're suggesting, you're gonna put in your will, this is what I want done, and that's why it's so important. You could take 10 people as long as it's executed the way I want and I've put in my will.
Right.
But do have families that have their kids, 2, 3 kids as executor. But if you think that there might be trouble doing that, you could actually, there's trust companies out there that will actually be the executor. There's trust companies out there that will take over the executorship. So if there was 5 kids that were fighting and they're saying, okay, let's stop this, let's hand it over to somebody, there are companies like Agenda, they will do that.
Right. You're
yeah.
so correct. I've
Yeah.
got another situation where let's say the husband, he left it in care of CIBC Trust to take care of that
Yeah.
part of it. So you can utilize that as well.
That's right.
Now, I've known situation where gentleman got about $2 or $3 million in investment. He did not put away cash in event of death.
Yeah.
Accident happened. Suddenly, they have to probate the will, and probate costs very, very high.
Yeah.
Usually, these things most of the time has to be paid out. The estate has to be sold.
That's right. That's right.
So that's why you were saying that it's good to have that cash value in
Yeah.
your insurance.
Yeah,
Or
yeah, because for most Canadians, we work hard and we want to save our money and we want to go to our families. We don't want CRA touching anything.
Right.
So you have to find a vehicle to prevent that from happening. And life insurance is a great vehicle because it's tax sheltered for now. I don't know what the government will do. It's tax sheltered for now.
Yes.
So it's giving your son, your daughter, your wife, here's that check. You pay off all the taxes. You can keep all the assets. You can keep the cottage. You know, you
Right.
don't have to pay the taxes on that if it's going to your children, right? Yeah.
That's a great way of looking at it. Now, we were talking about bundling your insurance together. So before I got my car insurance with one company, home insurance with
Yes.
the next, life insurance with another, just like any product, it's probably best for us to take everything, consolidate in one, and get a cheaper cost.
That's right. I agree. Bundling is great. It doesn't always work all the time, but
Okay.
in most of the scenarios, it does work. So if you've got one car in a house, the car will get a discount. If you have 2 cars, and those 2 cars are going to get another discount.
Okay.
If you have multiple homes, like a cottage, then you may have another discount, right?
Okay.
So those are some of the things. Plus, you have things like claims forgiveness on your home and on your auto might become free if you have your home, auto, and life. So that's a great benefit there, right?
Yep. Now, I have one experience that I want to share with you personally. My rental properties, I had them all with one company, and I kept them. I'm a loyal guy, so I kept them
Yeah.
with that company for about 10 or 12 years. And every year, the fees keep on increasing. I called to ask whether I could do anything different, and they said, no, sorry, it's difficult. I decided to shop around, and I was really, really shocked that I could find much cheaper insurance with another company. Since then, I made it my policy to shop around every 3 years.
Yes.
What are your thoughts on that?
I think that's a fantastic idea.
Yeah.
We as consumer, and I'm a consumer as well, and I work in an insurance company. It is so important to know that we have that ability to, I don't like something, I'm going to shop and I'm going to do it. Please shop around. And I tell my customers that. I said, these rates are set on statistics and based on my company's loss ratio. And if they're a little bit too high, because we know what's in our pocketbook. Shop around, see what's out there. But if you're shopping, please come back to me and show me those quotes because they may give you a different coverage. You may have less coverages. You don't want to pay less for
Okay.
less coverages. So very important. They may give you 1 million liability as opposed to my 2 million liability. Their
Okay.
building may be lower. They may not have flood coverage. So you have to be very careful.
That's where you got to be careful
Yes.
because, yes, they may give you a product that looks cheaper,
Yeah.
but on the other side, you're not fully protected.
That's correct. Yeah.
Oh, good to know that. I
Yeah,
never
cheap
knew that.
doesn't always mean the best for you, right? Not always.
Okay.
Yes.
So let's recap on a couple of the things we talk on. First, we talk about fire insurance, as you said, comprehensive.
Yeah. Best type.
Right? You need to get that one. If you have a tenant in your basement, then let the
Insurance company
insurance
know?
company know.
Yes.
Any material change you want the insurance company to know as well.
That's right. Yeah.
On condominium,
on condominium, please get some insurance. Cover your asset, cover your liability. That's a lot of money in there. Loss assessment. Who has 10,000 to pay?
Right. So
It's
that's important in condos as well. If you are now, when it comes to insurance, mortgage insurance, you said that we should try to avoid taking mortgage insurance.
Yes.
Instead, take a level term insurance for the same period.
That's right. Just think, the person who's selling you life insurance has a license, have gone to school, had to write exams. The person who's doing mortgage insurance, none of that.
So just take care, buy it or don't buy it, right?
Yes.
But you can really, as we discussed, some mortgage insurance can be canceled at any time. You're not locked in.
No.
Some people take it for a few months until they get settled, and then they will come and see someone like you, and they can take it from there.
That's right.
Right? So that's then we talk a little bit about whole of life insurance and universal life.
Yes.
So give us final thoughts on that.
So universal life, if you have a lot of assets and you want to protect those assets and you could afford to overfund it, universal life is a great way. If not, but you want to have permanent with some kind of cash or dividends, whole life is probably a better product, right?
Right.
And great for kids too, whole life.
Okay, that's a very good point. Now, on the same token, though, is that with the universal life, you don't have enough cash in there, your policy can get paid up as well, right?
That's right.
So that's the downside.
That's the downside, right? But it's for you to. The whole idea is overfund it. If you know you're going to overfund it, take it. It's a
put away your money in there. That's not a bad idea at all.
That's right.
And now coming down to estate planning, we spoke about the importance of putting away money in the event we do not come home, to take care of all the costs. And one of the best vehicles to save this money in an insurance policy.
Yes,
right?
I totally agree. So always, everybody, please have an insurance policy. It doesn't have to be big sums, because we have small assets and then we have people with big companies. So depending on where you are, it is so important just to think of the families afterwards and what they're going to have to go through and pay the taxes and things like that. So insurance is a great way of doing it tax-free, which is important from the government.
Well, Sandra, it's such a pleasure having you.
Yeah, nice to be here. Thanks for having me.
So helpful. Thank you so much. Thank you. Until next week. See you then. Bye now. Hello, my name is Jay Bridgeball. I'm a real estate broker since 1988. I've seen the good days, the bad days, and the not so bad days. My passion is to educate consumer about all aspects in real estate. Actually, I sold over $1.75 billion in real estate. Now, that's a lot of experience. I went through many failures, many successes, and I've seen many stories that you will be amazed. Not everything looks so glamorous as it is sometimes. On Let's Talk Real Estate, we will dig deep down and I will take you step by step through every process, from buying your first home to buying a multi-million-dollar investment property. We will have various people on this show. Lawyers, investors, we'll have mortgage brokers, appraisals, and everyone else to assist us to take you to that point. My aim is to break it down in such easy terms that you will be able to follow. So please join me every Thursday between 1 and 2, and let's talk real estate.